market. Are you seeing anything on the horizon that suggests the 30-year bull market is over?
Well, I see a suggestion that perhaps the rates bottomed. That's not the definition of a bull market being over. I would suggest the definition of bull market being over would be the initiation of a bear market. And I simply don't see that as long as central banks continue to do what they do. You know, the three banks that are actively engaged now in the UK, the ECB and the Bank of Japan, you know, it's $180 billion a month in terms of spending towards bonds that ultimately flows into equities, and even those countries are buying equities and corporate bonds. So as long as that continues, very hard for a bear market. It doesn't mean, and I will put it right out front as I have for the past 12 to 24 months, that this artificial stimulation one day will end in ruin. But as long as the money keeps being pumped out and you have a buyer for bonds in the face of higher inflation, you know, whether it's 2 or 2.5% still to be defined in various countries, then it's hard for a bear market to begin.
Well, Bill, are you that buyer? What we've seen recently is a steepening of the yield curve. I just wonder whether the flattener returns. You came on Bloomberg Television a couple of months ago and said that you'd shortened duration. Has your portfolio changed since then?
Yeah, the duration has been short, you know, centering around zero. My point, and I've talked to Tom about this and Mike about this over the past, you know, several quarters, is that in this type of environment, if your main theory is that yields are range bound within a 20 to 25 basis point range, then it's not the buying or selling on a trading basis that you know, produces a total return, but it's the selling of volatility around those ranges that produces a much higher yield and a much higher return. You have to be right on that range, and if the ranges are broken, obviously you're not making money. But the selling of calls and puts on a range-bound market is perhaps the most attractive way to make money in that type of market, and that's what Janus has been doing, and that's why we're, you know, ahead by 5.3% this year, beating stocks and beating bonds.